So Bill, you got some big news. Tell us about the big news today, and congratulations.
Oh, thank you. So a few minutes ago, we announced the formation of Abra Bank. Abra Bank will be the first full depository institution for cryptocurrency in the United States. There are several trusts operating today in the U.S., but no operational bank, and we believe Abra Bank will be the first. So it's a big day for us.
So why form the bank, though? I've heard you talk about it, just for our delegates. What was the rationale and the business vision behind forming it?
Yeah, so look, our vision is to be the premier bank for Web3 and crypto globally. And we believe in this ethos of not your keys, not your coins, but people need help in the crypto space. And we simply want to be that help. And you need to have a aggressive regulatory framework today to do that. You need to have the right security models in place. As we saw with the lending crisis, you need transparency in what you're doing. And we believe that this model lends itself perfectly to enabling all of that. And we've been working very quietly in the background for a couple of years. As anybody who's been in the banking business knows, this is not an easy thing to do. And we're actually doing it in multiple countries to make this happen.
How do you see the space evolving in terms of, will there be an FDIC for crypto? Will there be a SIPC for crypto? What happens?
So I think that the degenerates have led the way in terms of potential and understanding the use cases, right? I'm sure a few of you here have tried to use something like a MetaMask. If you've ever tried to buy an NFT or use crypto directly, you need to have a PhD in computer science, it's very basically.
It's also scary because if you lose something.
Exactly. So we think that there's going to be a kind of spectrum of services from I trust no one, which is I have the PhD in MetaMask and I can do that stuff, to the full banking model that we enable that does all the same things, but you're actually having someone who can manage the keys for you, can integrate into the Web3 apps, can help both consumers and institutions buy, sell, invest, get access. We're launching other products, which we'll talk about in a minute. But the complexity of the space needs a spectrum of services, from fully trustless to I need help with a trusted intermediary. And I think we're going to see a next generation of banking services, broker-dealers, all kinds of companies emerging now to act as those trusted third parties to help.
So, the message I'm getting is I own my crypto, I deposit it with Abra, and I get the sort of same security as if I'm holding my own key, but then I get the additional protection that you're a custodian.
100%. That's the idea. That's our vision.
That's the scintillating message.
With the added real mantra that we operate under, that anybody who deems themselves a crypto bank needs to enable consumers or businesses and institutions to get 24/7 access to their stuff. So if they think that the sky's falling and I need to put stuff in hardware storage immediately, you need to be able to do that, right? No, my funds aren't locked up, and so we believe very strongly in that ethos while trying to add huge value on top in terms of simplicity, user experience. Our institutional services are booming in terms of lending and market making and a whole bunch of other offerings. And so we're trying to add value across the spectrum at the same time.
So not to bore our delegates, but in fractional reserve banking, what ends up happening is you put your deposits on, a fraction of those are left in the bank, the rest of it is lent out to other people. And so God forbid, if there's a run on the bank, there's sometimes a problem in terms of a short-term asset liability mismatch. How do you avoid something like that at Abra?
Well, the biggest way you avoid it is segregation of assets. So the core Abra Bank offering will not be allowed to hypothecate funds. So there's no rehypothecation allowed, which is the crux of the issues that happen in the lending space, which is effectively, it's kind of a run on a bank but nobody was able to access the funds at all from the get-go once the contagion started. And that simply can't happen in this model because we're not allowing for hypothecation, right? And so there will be investment opportunities, but that will be separate from your core, holdings. And with an investment, there's risk of loss. Right. But most of our users are taking risk holding crypto in the first place. Sure. Right? So they're like, hey, look, I'm all in on crypto. I don't need to basically be taking incremental crazy risk, right, to generate 1%, right?
So let's talk about some of these product offerings. You have a new offering with American Express. You have a new type of NFT bank account. Tell us about those offerings and the other things that you're working on.
Sure. So we've actually created several companies within Abra now. We have our asset management business. We have our consumer business, which most of you probably know. We've got our international company. So on the consumer side, we're launching a new credit card product with American Express, which should be out later this year. It's going to be a first of its kind product on the American Express network where you can actually earn crypto rewards tied to your Abra Bank account / wallet. We're launching an NFT product, which again, under that ethos of eliminate the complexity of MetaMask, but give you control of your stuff. You'll actually be able to go to OpenSea, SuperRare, Autograph, check out to buy and participate in the NFT marketplace, but without having to use MetaMask for the first time directly from the bank account. And then it stores the NFTs for you without having to worry about how to deal with key management.
So we sort of asked this of Tom Farley and Mike Novogratz earlier today. Your long-term, your short-term, and long-term horizon on the cryptocurrency market. And then if you were my wealth manager and I came to you and said, okay, how much of my assets should be in the cryptocurrency space? What percentage would you use? So the first question is about the macro environment for crypto. Mm-hmm. Second question is how much of my assets should be in there?
Yeah, so I think that my answer has changed. I used to say 5%, and now the number's gone up. I would probably say closer to 15% for somebody who's actually conservative. I think that given what we're seeing in the economy right now.
All right, so you've now been fired by every wirehouse on Wall Street.
That's fine. I don't think I was hireable anyway, so it all works out.
I obviously am not hireable either, which is why we have to do this together.
Exactly.
But just why 15%? Because it seems like a monstrous number, and of course, my percentage in my portfolio is way higher. But
right, and mine is much higher, but it also worked into it. So look, I think that we're in this mode where it's going to be extremely difficult over the next few years to generate real returns. Let's put that aside for a second, though. Okay, I think that we're going to see a bifurcation. Everybody calls it in this room certainly the crypto space, but I think it's actually more than that. All right, let's take Bitcoin as a really relatively stable store of wealth, but it's actually stable relative to Bitcoin. It's not stable relative to the dollar, right? The reality is the dollar is really strong right now, but that's about to, in my opinion, about to reverse in a massive way. Fed can't sustain what they're doing, right? So I think everybody accepts the fact that we've got to get back to dramatically lower interest rates, which means falling dollar, which means asset prices are probably going to skyrocket again, which means crypto is going to get an outsized benefit from that versus traditional risk on assets. I think everybody...
I want to leave you on stage all day. I just want you to keep going.
But I think Bitcoin is unique in that spectrum because it's impossible to change right now. I mean, it is so hard to change, right? Proof of work is not going anywhere. We can all fight ESG, whatever. It's just not going to, it's like changing the atomic structure of gold. You can't do it, right? It's the atomic structure of gold. Ethereum, on the other hand, I think the narrative is going to diverge because people are going to start to recognize, hey, we're grouping them as crypto, but this is the future of computing. This is not just the future of money, right? This is the future of banking services, gaming services, derivative and investment banking type of services.
Why?
And that's a...
Let me hit you. Why, though? I obviously believe that, but you have to explain it to somebody that doesn't understand that.
Sure.
Why would it be the future?
Okay. So look at it this way. There has been a massive shift on the planet. I would say that the pinnacle of global centralization, right, after the pyramids was probably the moon landing. We literally put a bunch of people in a tin can, put a missile underneath it, and shot them to another planet. Massive effort, I would posit that since then, there's been a massive global effort towards decentralization. Started, you went mainframes to microcomputers, PCs, then internet, then smartphones, and now we talk about blockchain and crypto, and it's still a methodical march towards decentralized systems, right? When my old day at Goldman, everything was client server, and then we had to web enable stuff, which further decentralized everything, but now we're re-architecting everything, to your question, using this kind of concept of Ethereum and tokenization, which in theory also means all those central servers are eventually going to go away, right? And that's what Ethereum is enabling.
And that is a good thing
because there's no off switch, right? No one owns it.
Sturdier.
It's sturdier.
Because it's decentralized.
Right? It has no borders.
Right.
We can debate all day whether it's good or bad, but it is.
Because you don't have to trust anyone.
That's right.
Therefore, it's trustable.
That's right. And so the idea of a trustless internet was always the promise of the internet. Why was the internet developed? The internet was developed in case of nuclear war that the network would never go down. Well, ironically, we now trust 4 big companies with most of our personal information on the internet, right? This undoes that, and it does it at global scale in a way where no one bad actor, one government, one corporation gets to decide, you know, what's what, who owns what. And I do think that there's room, like, you know, we're forming a bank, which the irony of that is not lost on us, but our goal is to add value on top of those trustless systems. And if we're not adding value on top of the trustless systems, on top of Bitcoin, on top of Ethereum, then we don't need to exist, right? And so that's where this is headed, in our opinion.
So because of that, because it's tokenizing and decentralizing, the value of the space has to go up because there'll be more users in the space.
100%.
Is that fair to say?
I think that the value of Ethereum in particular is directly related to the number of active users times, you know, Raul has a great report on this, but times the number of dollars flowing in the system. And right now, that's related to the money supply, which is, you know, and that's no different at the end of the day than any other network effect stocks that are out there. I don't think Ethereum is a stock, but in terms of valuing the network, it's network effects, right? Bitcoin is a little bit different because it's directly related to our current monetary system, and it's becoming a hedge, right? You know, Chamath calls it schmuck insurance. I mean, it really is the ultimate hedge against everything, you know, going wrong.
So you're going to go into banking. Banking is heavily regulated. There is a central bank for every country, but you're really going into decentralized banking. And so how are the centralizers going to get comfortable with that?
I think in 20 years, the largest bank on planet Earth will be a crypto bank. I don't really have a big concern as to whether...
I'm hoping it's Abra.
With me or someone else. I hope it's Abra too. I would be fine if there was 10 other people who get it that were doing it, and, you know, I could reap the benefits of that and do something easier, but they're not. And so I do genuinely believe that these rails that we're laying are the future of banking. The biggest banks in the world in 20 years are going to be crypto-centric banks. And that's either going to be the existing incumbents becoming crypto-centric or them being replaced with others. The same way people laughed at the internet software companies basically leveraging network effects to become the biggest companies in the world. And I was at Netscape in the early days. You know, people laughed. Internet was porn and gambling. That's all it was in '93, right?
It's not more than that now?
It's a lot more than that now. Okay? So it's porn, gambling, and betting. So
you gave this amazing tech talk. My staff sent it to me, and I was riveted by it. It was in 2012, 10 years ago. Bitcoin was trading around $5. It was a very volatile asset. But you were talking about it. You were preaching the value of it at that point. You were talking about the decentralization. You were talking about the tightness of the technological ledger. And you made some predictions there, and you said it would be an amazing asset over the next 10 years. It's been the best performing asset. What are the next 10 years? What does that look like for Bitcoin, Bill?
I think it's global adoption. I think that you're going to see more companies, more countries I think there's going to be multiple hotspots of countries where things are going south, whether it's in Ukraine or Venezuela or Turkey, with hyperinflation, that adopt Bitcoin, Ethereum, other cryptocurrencies for different reasons. And then there's going to be mainstream adoption for different reasons. I think, I'm hoping that stablecoins win versus the central bank digital currency model for privacy and competition reasons, but either way, we'll be fine. But I think we're going to see 1 billion people touching crypto rails directly without necessarily all knowing it.
So
right? It's like saying you don't know how a money market works if you've got a bank account, but we're all touching those systems in some way.
No, I got you. It's 2022. 10 years from now, 2032.
Yeah.
What's the price of Bitcoin?
Let's see. I mean, a rough network effect model, million.
10 years from now.
Yeah.
I'm ending the conversation right there, okay? But I hope you don't mind that, okay? Congratulations on what you're doing at Abra. And I look forward to being in business with you for a very long time.
Same here.
All right, God bless.
Thank you.